Hey everyone, it's Veronica from Resource One Credit Union.
Hi, it's Elizabeth from Resource One Credit Union. And understanding credit can be kind of complicated. We always have our credit scores out there and it seems pretty scary. But today we are going to give you the scoop on frequently asked questions about credit scores and credit.
So let's first start with what is a credit score? So you can think of it like a grade. So this grade shows us your credit worthiness and the probability of you paying a loan back and paying it on time. So it's based off of your credit report and it holds some information, current debt balances, payment history, debts that you've paid off, debts that you haven't paid off, credit limits that you have on credit cards, and the last 24 months of your history, that probably weighs the most on your credit report and your credit score.
So, where do these credit scores come from? They come from Equifax, Experian, and TransUnion. These companies, they kind of compile all this information and provide this credit score to financial institutions and other institutions that pull credit. You may, renting an apartment, getting a house, you may have heard people say, oh, I'm going to run your credit. Well, that's what they're doing. They're doing a quick check and see like, okay, has this person been paying all their bills recently on time? Do they have too much debt out there? Because you get to a point where it's like your income can't cover all the debt that you're adding on. So people want to make sure that you're probably going to pay them back.
Yeah, and it looks at your load too. So have you ever heard of debt to income? So how much debt you have versus how much money you make. Now, the credit bureau doesn't know how much money you make, but when you're going to a lender to get a loan or it's something that they have to check your credit for, they're looking at how much money you make. They are looking at that, how much money you make versus how much money you owe. So another question that comes up is, what actually is a good credit score? And I don't really like that question very much, but credit scores do range from 300 up to 850. So the higher the credit score, the better it looks. A score above 700, I would say it's better than a 300, but it's not as good as an 850, which is excellent.
Yeah, it's kind of like we go back to the grade. It's kind of like your grade on how your credit's been doing. And sometimes, you haven't studied for a test and your grade could suffer. So sometimes you haven't paid some of those debts and your grade is going to suffer a little bit. But that's okay because the grade is not permanent. There is always room to get bonus points on your grade and improve it.
Always.
So I would never look at a credit score as, oh, you're good or bad or anything like that. You really need to look at it as a sliding scale. Like sometimes things happen in life, like you might get hurt for whatever reason, you're going to have medical debt. It is what it is. But that medical debt's not always going to be there. And you're going to have to pay it back and figure out ways to pay for it. But, just because you have that happen doesn't mean that you're a bad person, or even though it might bring your credit down some, it doesn't mean that you're a bad person or you've done bad on your loans. Life happens. So you just have to work with it. And the good thing is with a credit union, we don't just look at your credit score. You're not just a number to us. So tell us your story when you're out there getting the loan. Tell us what's going on. And definitely, I will say, if you've had a good commitment and a good relationship with your credit union, more than likely, they're probably going to do a loan for you again. It's really about relationships. The score does help in the factor, but it's not always based upon that for us.
Right. And typically, they're not just going to say no. They're going to say, maybe not right now. Maybe they'll give you some information to get you to a point where we can say yes. It's not just about saying no. We're not going to say no and pass you on for you to go to another lender. We want to actually help you because sometimes that loan might not be even good for you, and we want to explain why, and we can't explain that why. But one cool thing is there's a lot of different factors that affect your credit. And so I think we should go into some of those. And one of them that's probably the biggest deal is your payment history. So it's you paying back your debt on time. For a positive result on your score, you pay it on time, you don't miss a payment, you don't let it go past due. Because when you do that, that can just really take a good amount of points. So no matter how good you've paid, if you're late one time, that can take you down a significant amount of points. And one thing to note is that some of those unpaid debts that you have, like let's say your electric bill or a gym membership, some of those items, things like that, they're not going to report that you're paying those good. I mean, that's great that you are, but as soon as you pay those bad, that hits your credit report. So when it's not like an actual loan. So that's one thing to kind of keep in mind there.
Yeah, it's really great to pay your bills on time if you can. We know things happen. We were just talking about that. But keeping your payment history clean and having it look good, that's a huge factor into your credit score. Another thing is recent activity. So if you're applying for different credit cards or different accounts or multiple loans, or like you really need to find a lender, I'll just throw this out there. You really need to find a lender and kind of stick with them, because each different lender you go to, like say you're shopping for a vehicle, a new vehicle, they might say, oh, at this dealership, let me pull your credit. Oh, over here, let me pull your credit. Well, now that's two things on your credit that just hit. The more times people are hitting, people are like, wait a minute, what is all this activity going on? Is it fraudulent? Are they really trying to get that many loans? Are they going to be able to afford it? So you need to really be cautious about how much activity you do on your credit and really make that commitment. If somebody asks you to pull your credit, be committed to it. Really, hey, yes, you can pull my credit, because it's very important, especially if you're looking for those large purchases that typically a credit score is going to be used for.
Absolutely. And then the length of your credit history. So it's just an average of all of your credit accounts. It's a small portion of what factors into that score, but it's still a portion of it. So the longer you have a loan with positive pay history, the better it reflects on your credit report. And so this is why this is why when you close out a ton of credit cards or pay off, your score can drop if you close them. So it's just really good to have them. The longevity looks good to that score, to that grade that you're getting.
Yeah, sometimes having a credit card where it's just, you put gas purchases only on it and you can pay off your gas every month, and set that aside kind of like a bill, and it's something you can pay, then it's really good, because it's like, oh, you've had that card for a really long time, positive. You're doing a lot of activity on it still, so that's a positive, and you're paying it regularly, so that's a positive. So that's really good factors that you can do. And just a little secret tip, and I want to throw out there, like sometimes, we're talking about the length of credit history. Sometimes you're just starting out, like think back to when you were 18, 21, you're trying to get a car or something, or trying to rent an apartment, and it's really challenging because you don't have any credit history. One thing that I can suggest that I personally did is I got a small credit card, one where it was like a really low balance. That way it was like $200 or something. And it's like, hey, I know with what I'm making, if I got in a situation, I could pay $200 off, no problem. It might take me a couple of months, but I can pay for it. So let me go ahead and get that credit history built up. It wasn't much, but it was something, and it helped me build up my history. And that way I could get a car loan, and different things, because I hated when I was first starting out where people were like, oh, you don't have any credit, we can't help you. And it's like, somebody needs to give me a chance.
Right.
Exactly. And you can do a secure credit card too. So that will also help. If you already have $200 in savings, get a little small $200 credit card, and then you can have that money set aside where it's secure. So you're still making that history, you're still paying your payments on time and everything, and building up your credit. It's kind of like a hack to the system, I would say.
Oh yeah. But also, even when you do start off with something like that, you have to be mindful of your credit usage because it's a big part of it. So what I mean by usage is kind of the capacity of those cards. Let's say you do have a $200 limit. You really don't want to go over 30% using it. You know, you don't want your balance or what you spend to be over 30% because if it's maxed out, that's what we say. If you have a $200 card and you have to use the $200 limit, it's maxed out at that point. And so that can look negatively, or it can take away some of those points that you have. So it's really important that you do pay it back. One tip that I've gotten from a friend before, and it's just someone who thought that they were doing the right thing, and she would tell people, you get that credit card and you start spending everything. And everybody is different. I'm not gonna say, I'm not judging anybody for what they choose to do, but you just have to be careful and mindful. But she would say, go and swipe your card, use that for gas, use it for food, use it for all of your expenses, and then pay it back. Yeah, that's awesome. You can do that. You do have that option when you have that credit capacity, but you have to be careful because if the credit bureau sees that limit being high, it's really it's also easy to slip into a situation where you're relying on that credit card for it. And you don't want to rely on that credit because if you can't pay it back for some reason, then that's another thing that's going to affect that grade that you have. So a little bonus for you there.
Another thing that could affect your credit score is the type of accounts that you're getting. There's multiple different accounts that go towards your credit. Specifically, the easy ones to point out are things like your car loan, which is called a collateral loan. Your mortgage could go towards it. Unsecured loans, so like a signature loan or like a personal loan, your credit cards go towards it. So all these different types, they have different ways that you pay it and different terms and limitations. And so because you have these varying types of accounts, it makes it look like, hey, I can handle something that's unsecure. I can handle something that's got collateral behind it. So they all look completely different to your score and affect your score completely differently.
Yep. So very good to have a nice credit mix. And this is just a topic that can, that we can go on about and that we love to educate our members and educate everyone on how big a deal credit is. But if you have more questions, or maybe you want somebody to look at your credit to help find ways to improve your score, it's totally possible. We said it before, there's good scores and there's bad scores, but even if you consider your score bad, it might not be that bad. You can come in and talk to someone. At our credit union, our budget buddies are available to help our members for free. So you can come and speak with someone and they can maybe help, lessen that load because credit can be a load.
Yeah. And, sometimes it really surprises me how many people are like, oh, my credit score is so bad. But really, when you start working with them through the loan process, their score is not bad at all. And it's like, hey, I approved you for your loan. They're like, wait, what? Exactly. And it's like, we look at different factors. Everything is completely different. So, just because you think you have a low score, you probably honestly don't. Yeah. But one thing that you can do to monitor it, if you want to be on top of your credit score and really watch it, is we offer something called Credit Score by Savvy Money. It's in your online banking and in the mobile app for Resource One, and it will show your score. It will give you different scenarios to give you tips on how to improve your score. It has offers out there. It has different things where you can watch it go up and down and all sorts of things. So it's really cool, especially we're starting a new year. We want to be on top of all this stuff and we really want to have a positive outlook to this year. So staying on top of our credit score, monitoring it, it's really important. It's also important because fraud could happen on your credit. And so this is a way where you can really watch it and make sure nobody else is using your credit that you've worked so hard for and built up and doing something negatively. So when you need a loan at whatever point in time, you can get it versus somebody who's been messing with your credit and now you're really stuck.
Yeah, that's totally, I have to say, that's totally the biggest reason. Even if you don't necessarily need to use your credit at the moment or whatever the reason is, you definitely want to check on it just to make sure there's nothing fraudulent. Because I had something happen to me and it was no
Oh
fun. And
no.
so, yeah, so it's definitely important to keep tabs on it. And something like Savvy Money, which is free, can help.
Mhm. Yeah, and it's really cool because it does update in real time and it's called a soft pull. So that means it doesn't hit your credit report. So we talked earlier about how if you're going out and shopping around and people are pulling your credit, this does not pull your credit. It's a soft pull. So it's just looking high level. It's not hitting your credit score. It's not impacting your credit score. So it's super helpful to have. And then another bonus tip, you get 3 free pulls on your credit every year. It is a regulation that you get to have this information at your fingertips for free. So you get 3 free pulls every year. I mean, you honestly don't need it if you're using Credit Score by Savvy Money and Resource One's mobile app and online banking. But just a tip, you can really dig into your credit score and like look at the different bureaus once every year.
Yep, just know that anything is possible. So come talk to us. We'd be happy to help. As always, the link is in the description below.
And now you have the scoop.